You might have looked at the price of Bitcoin and thought, it's just too expensive, I've missed the boat. But what if I could prove to you that it's not expensive at all? In fact, it's actually very, very cheap. In this episode, we'll break down why Bitcoin has plenty of upside left for years to come. We'll explore adoption, inflation protection, and Bitcoin's role as a fundamental economic layer. Let's get into it. Right now, Bitcoin trades at around $100,000 per coin. That doesn't mean that you have to buy a whole Bitcoin. One Bitcoin is divisible into 100 million Satoshis, so you can own a fraction of a Bitcoin. You can start with $10, $50, $100, whatever works for you. The first mistake people make when thinking Bitcoin is too expensive is focusing on the price per coin rather than the value of the whole network. More importantly, the current price doesn't represent Bitcoin's future potential. At around a $2 trillion market cap, Bitcoin is still tiny compared to major asset classes. Gold is around $22 trillion. Global real estate is $370 trillion, and the stock market is $135 trillion. It's estimated that the value of all assets worldwide is around 1,000 trillion, or $1 quadrillion, as of 2025, and roughly half of that is being used as a store of value. This is what Bitcoin is competing for: $500 trillion worth of assets globally. And guess what? Bitcoin is the better store of value than all of these things. It's better than gold, it's better than cash, it's better than art or real estate, it's better than stocks. We'll get to why that's the case in a minute, but just so you have an idea of how much upside there is left, if Bitcoin reaches 1.5 capture of the total market, it could reach $350,000 per coin. At 5% capture, it would be worth around 1.2 million per coin, and many are expecting it to reach 1 million before 2030. At 10% capture, it would be around 2.4 million per coin, and at 50% capture, it would be worth 12 million per coin. But Bitcoin won't stop there. It's aiming for 100% capture, which means 24 million, and that is not accounting for inflation. This is just market capture. When you factor inflation into the mix, at 100% market capture, it could easily reach 50 million, 100 million, and even higher given enough time. Hopefully you're starting to see the bigger picture here. It's not just any old asset that you can buy and trade with. It's positioned to become the center of gravity for the entire financial system. But how can it possibly do that, though? To truly understand why Bitcoin will beat everything else and replace the entire financial system, we need to understand inflation. So, inflation is when too much money, demand, is chasing too few goods, supply. This results in the price of goods rising. It should be obvious that when you print money, you increase the amount of demand and prices will rise. So, money printing is the primary source of inflation. There are other smaller sources, but this is the big one. Without going into too much detail, governments around the world are stuck in a debt spiral in which they literally have to print trillions and trillions of dollars just to keep the system from crashing and burning. This guarantees that your money will be worth less over time, which is why people buy assets to store their wealth in places that can't be devalued, like gold or stocks or real estate. But none of these are as good a store of value as Bitcoin, because all of these assets can be inflated. You can mine gold out of the earth at around 2% a year. Most of the companies are just about keeping up with the true rate of inflation, and you can build more houses anywhere in the world. The only asset in the entire world that has a perfectly limited supply is Bitcoin. There can only ever be 21 million coins and never a Bitcoin more. The world does not yet fully understand the meaning of this perfect scarcity. If we go back to our inflation definition, when too much money is chasing too little goods, well, if the supply is capped, we know it won't expand, but there's an ever-increasing amount of money chasing that. What do you think will happen to the price? That's right, it will go up forever, until fiat currencies hyperinflate and all that's left is Bitcoin. But here's something that most people overlook. Bitcoin doesn't just protect against inflation, it actually benefits from deflation. Fiat currencies have to inflate because it makes their debt burdens cheaper, and the entire fiat system is a house of cards built on debt, so deflation crashes the system. Bitcoin is a house of bricks and cement built on perfect scarcity and maths and backed by the laws of physics and energy. And because Bitcoin's supply will never increase, this means it captures the natural deflation that occurs from technological innovation and competition. Just look at how much TVs, smartphones, and computers have dropped in price. On a Bitcoin standard, these savings are directly passed on to consumers because there's no inflation to mask these price drops. As more efficient ways of producing goods emerge, Bitcoin's value increases further because it can buy even more. Imagine a world where your money not only holds its value, but grows in purchasing power. Bitcoin makes that possible. Here's the bottom line. Bitcoin's current price is not too high. It's just a reflection of where we are in adoption today. But Bitcoin is a long-term play, and its real potential lies in years and decades ahead. You don't need to own a whole coin. Start small, educate yourself, and think about the long game. Remember, it's not about timing the market, it's about time in the market. Don't let the fear of high prices keep you from securing your place in the future. Start building your position now and you'll thank yourself later. Bitcoin isn't too expensive, it's too valuable to ignore. Thanks for watching, catch you in the next one.